Tech is back in the leadership position today, big tech, but small caps lately have been the ones putting up some big gains. The Russell 2000 outperforming the Mag 7 over the past month. And my next guest thinks that'll continue, says the trade has legs next year, but expects the leadership to change. Julie Biel is chief market strategist at Kayne Anderson Rudnick. Julie, welcome. And what do you think is about to take place?
Well, I think that what's going to really start to happen is people are going to recognize that earnings growth is what really matters. And a lot of what's been doing great in the Russell has been quantum computing, which doesn't have earnings, biotech companies, which don't have earnings, and companies with high levels of debt. And I think there will be some recognition that growth is going to accelerate in small cap, but among the higher quality businesses that have really figured out how to resolve inflation, labor headwinds, higher interest rate costs. I think those are the ones that are going to do better. And I think that if you really study a little bit of the idiosyncratic qualities of all of them, you can find some really nice gems, and they're trading at better valuations too.
A lot of people have pointed this out, that even when we're talking about the small cap rally, they've called it, I don't want to say the trash, but like the low quality stuff. Why is that? Is that because that also could be where the growth is?
I think a lot of it is just, it's pure speculation, and a lot of it has been driven by retail traders, right? So a good chunk of it is actually happening in retail. Something like 30% of volume is in stocks that are less than $5. So it really kind of points to, what you would call lower quality. And I think it's a recognition of a lot of young people really trying to get rich quick on some very speculative parts of the lower quality market. So to me, it's just, this is an opportunity to look at the higher quality businesses that still haven't gotten the shine on them the way that low quality has.
For instance, LMAT is one of your picks, down 6% this year, and Encino's down 23%. You love it.
I do. I think both of these businesses are really differentiated. Lemaitre is a business that is in healthcare, but it really doesn't face a lot of the same regulatory pressures and pricing pressures. It's actually been able to find a lot of pricing growth and strength in its business. And Encino, nothing in software has done really well because everyone is just assuming that we're rip and replacing and vibe coding. And I actually think a lot of these vertical SaaS software companies are the ones who are going to be able to leverage a lot of the AI and sell it to their customers. They have the relationships. Encino is really well positioned to do that.